It's another 25 minutes plus on Business Incorporated, live on Channels Television. So let's find out what's happening, the top stories, international stories right now. South Africa's President Cyril Ramaphosa extends deadline for Eskom grid plan splits. Ghana's President John Mahama explores agro partnerships with Belarus. And Egypt's garments export rise 15% in the first 4 months of July 2026 amid strong US and EU demand. Now it's great to have you join us on the show. I'm Anete Edet. Let's get a check on the commodities market. Now, first, we see oil prices rose on Monday, that's today, amid heightened tensions in the Middle East as Iran and Israel traded strikes, raising concerns over a fragile ceasefire and an extended conflict. Now, international benchmark Brent crude futures for July advanced by 1.62% to $94.61 per barrel. For the U.S. West Texas Intermediate, the futures for August jumped by 1.82% to $92.19 a barrel. The prices pulled back from the session's high after President Donald Trump tried to keep the violence from escalating. Now, the U.S. president said on his social truth that Iran and Israel were looking to agree to a ceasefire. He says the negotiations with Iran on a final deal were proceeding while Iran's armed forces subsequently announced that the military operations against Israel had concluded. So this is what you see, the price of Brent. It was, see there, $94.61 a barrel, while for the WTI crude, the price was up kind of higher than the Brent there. We see it at 1.82%, $92.19 a barrel. So that's it for the global oil market. Now let's talk about the gold prices. They extended their losses today on rising fears of a U.S. rate hike after a strong U.S. jobs report that was just last week Friday, while renewed hostilities in the Middle East pushed the oil prices higher and fanned inflation concerns. So now you see there the price of spot gold was down by 0.36% at $4,350 an ounce. For spot silver was down by more than 1% at $68.37 an ounce. And for platinum and other metals, we see platinum was down by 1.16% at $1,777 for an ounce, as well as palladium also down. Now, the only gainer there on the metals market was the copper, which was up by more than 1.5% at $6,379 for the price of copper. So that's it for both the commodities markets, that's for metals and for the oil prices. Now let's talk about some of our top stories here. South Africa's President Cyril Ramaphosa has extended the deadline for Eskom's long-awaited grid split plan in a move aimed at giving the state power utility more time to finalize the restructuring efforts, which is seen as critical to stabilizing the country's electricity sector. Now, the president had said that the government's just approach pushes back to the highly anticipated launch of the South African wholesale electricity market to the third quarter of 2026, with a full operationalization of an independent transmission system. Now, the operator has now stretched that deadline towards 2029. Now, while the government maintains that the grid split is essential to permanently ending South Africa's energy vulnerability, concerns over commercial and fiscal risk have forced a more cautious phased approach. Now, the decision underscores ongoing challenges in unbundling Eskom into a separate generation, transmission, as well as distribution and entities, as authorities seek to improve efficiency, attract investment, and South Africa's persistent supply constraints. So now let's talk about Ghana. The West African country is eyeing a massive boost to its agricultural sector as President John Mahama concludes his landmark 3-day state visit to Belarus. On the final day of his visit to the East European country, that's for the industrial city of Brest, which aims to explore opportunities for transforming Ghana's agricultural sector. Now, the visit focused on the plant's advanced dairy production, technologies, including the processing of baby food, milk, cheese, and milk powder for both domestic consumption and for export to the global market. Now, President Mahama, who was received by the governor of Brest, Paramonchik, and officials of the Belarusian Foreign Ministry, toured one of the country's largest agro-processing facilities. So now, as far as that is concerned, in his remarks after the tour, he reaffirmed that his government is committed to adopting modern processing techniques to facilitate the transition from smallholder farming to large-scale commercial agriculture. Now let's head over to Egypt, where we see that the country's ready-made garments exports increased by 15% year-on-year during the first 4 months of this year, and this was supported by rising demand in key international markets, particularly the United States and Europe, and this is according to official data. Now, a monthly report issued by the Egyptian Export Council for Ready-Made Garments shows that total exports of the sector reached around $1.15 billion between January and April this year, and that's compared to more than $1 billion in the same period of last year. Now, the report shows that April alone, which is just about 2 months ago, recorded the largest monthly performance since the start of the year, with exports jumping to $287 million, and that's up from $260 million in April last year, also marking a 33% increase. Now, the United States remains the largest destination for Egyptian garments, with exports rising to about $429 million in the first 4 months of this year, and that's compared to $379 million a year ago, also reflecting a 13% growth. Now let's talk about South Africa, which is Africa's largest economy. Its own credit outlook has received a boost after Fitch Ratings last week upgraded the country's long-term foreign and local currency credit ratings from BB- to BB. Now, Makwe Masilela of Makwe Funds says the upgrade reflects improved confidence in the country's fiscal trajectory, while the stable outlook signals no immediate or either downgrade or upgrade in the near term. Okay, so now let's talk about the markets now. The stocks traded in negative territory at intraday session. And this just some few minutes ago, we saw that the NGX was in the red, but it has managed to go back into the green. And this is we see some oscillating in between the markets. So at intraday, this is the numbers here. First of all, we had a 0.26% pullback on the market, 242,749. 0.94 for the domestic stock market, while for the Johannesburg Stock Exchange, it was more than 0.5% shave off from the index that you see, the index number here. So, but for the Nairobi Stock Exchange as well as for the EGX, it's also a negative close, while for Nairobi Stock Exchange, as at Friday, this was down by 0.46%, but the point is having that the market is going to open in the green, and because of some investors' activity, positive buying sentiment from that market. Now, to give us some details about the domestic stock market, we have Abdul Rashid Momo, is the executive director and equity trader with TRW Stockbrokers. So, thank you for joining us, Mr. Momo.
Thank you very much.
Mm-hmm. Okay, so now my first questions, I think I have 5 questions for you. So what is driving today's movement in the Nigerian equities market, and which sectors are leading gains or losses? I've seen that market, there's been some movements there. So what is actually driving the sentiments as we speak?
Okay, first, I'm a technical analyst. I'll first give you what's happening on the floor of the exchange. In terms of volume, we're looking more of the banking, that's FCMB has traded over 115 million units, valued about 1.3 billion. We have Access Corp. Access Corp has traded about 13 million, which is about 341. Abe, Abe is the new kid on the block. They've gotten their commercial license, so they've traded about 21 million units, which is worth about 209 million, and TIP have done about 20 million, which was about 650 million. But, for some time, I think the most traded volume in the banking sector has always been Access Corp, but today they seem to be in the fourth position.
Okay, so now that takes me to my next question with you. How is investor sentiment shaping trading on the NGX, particularly in the banking, oil and gas, and consumer goods stocks?
Yeah, okay. Give or take, one thing about the NGX market, NGX market is more of momentum driven apart from earnings in terms of what the financials are saying. If you look at the market in terms of figures, the whole of May, what the whole of May did was what in June, in 4 days, the month of June wiped out, in 4 days, June wiped out a whole month of rally which we had in May. So the market seems to be touching a very strong support levels. The support levels is about 242,000 points. And that's when we saw a reversal on Friday. And we seem to be seeing another continuation of that reversal this week. So it's more of market in and out. When you've seen so much people sell into, there are a lot of panic selling last week, and we saw a lot of investors take advantage of that. So the market seems to be up now, and we're up by 0.51%, which is about 1,233 points as we speak.
Okay, so now you talked about that volatility in the market, and this is coming after the Eid holidays. We saw four consecutive days of negative trading last week, and just a rebound. So now, if I may ask, which stocks are currently attracting the highest trading volume or drop, and what is behind the surge or the decline in the activity?
As we speak now, let me say the whole indexes now, except NGX industry, are all in green as we speak. And as I've told you, the ones that are moving the market now as we speak, actually the banking sector. They are the ones at the top now in terms of volume. Most of the other stocks are actually in green, but we are not seeing much of full 10%. What we are seeing more is especially, let's say, the insurance sector, internet Gs, that's the one that has actually made the highest gain for today. Most of the lows we are seeing in FitSyn, Multiverse, Total, Okomu, but all we are seeing is traders are buying into the 10% benchmark, but the prices are not going to be 10% at the end of the day, because for you to move such stocks, you need at least 100,000 units for those stocks to move. So at the end of the day, I always tell people, buy into this weakness. Example, if you look at FitSyn today, FitSyn is trading about 136.50, but most of the purchases has been done at 122.85. So that's already a spread for anyone buying into that stock. But those stocks are not going to drop because they are stocks that are above the 100 naira mark, and you hardly see stocks on those volumes dropping easily.
I'm sure that some investors there might be taking profits aside from all the other factors. But now let's delve more about the Nigerian stock market. How resilient is the domestic stock exchange amidst the global uncertainty and commodity price volatility?
Okay, one thing you need to know, if you compare market on what has been happening, let's look at the market. I like to look at history. If you look at 2008, when we had the global surge in the stock market, Nigeria too followed suit. What really plunged our market then was a lot of investors were into what they call margin loans. The banks gave them margins. Even banks and insurance companies that came to raise money, most of those monies went back to the stock market. If you look at the market now, most of the funds we are seeing now are more of like the pension funds and everything. Even the individuals are not actually borrowing money from the stock. I mean, they're not borrowing money from the banks as we saw the last time. Because what kills the market is if, as an individual investor now, I know I'm losing in the stock, either I sell at my own will or I wait for the losses to ease off. But when it comes to margin loans, they keep calling, you have to sell down or you cover those losses. So as we see, the market is not under any pressure, number one. Number two, if you look at terms of financials, the financials being seen in the market, at least 90%, even 95% of the quoted companies I speak today are doing very well. So investors will prefer to wait for the next Q. Yeah, we are entering the Q2, the Q3 for them to know that, okay, at the end of the day, things are going to be very well. But to just summarize, the market remains fundamentally resilient. We may see, as we are seeing, we may see some short-term volatility as investors rebalance their portfolios. But in the underlying drivers, earnings growth, as I said, liquidity, and the search for real returns remain supportive. And the conversation now, less about whether to be in the market or more where to be positioned within the market. For us, I think the market is still going to be, this is just the beginning. The market is just taking corrections, and I feel with time we'll see the bulls resume.
Okay, Mr. Momo. I'm sure, I know that you're willing to give us more details about this market, which is one of the best performing around the world. But I'm sure investors are really taking your advice and really watch it. But so thank you so much for your time on the show, and we look out for a positive close for the very start of the second week of June on the domestic stock market. Thank you so much for your time.
Thank you very much. Yep.
That was Abdul Rashid Momo, ED Operations and Equity Trading with TRW Stockbrokers. So now we go on a quick break and we'll be back. You're welcome back. It's still Business Incorporated on Channels Television. Now let's turn our attention to Berlin for a look at how European markets are trading. And we have Chiponda Chimbelu, who has been keeping an eye on these markets. So now, Chiponda, how did the European markets open the second week of June?
Well, Agnete, the Pan-European Stock 600 actually slipped to a two-week low in today's session because of renewed tensions in the Middle East. But it has now pared back some of the losses from the morning session, and it is down 0.3%. Now, the losses in the morning were, of course, because oil prices jumped after Israel and Iran traded fire last weekend. That obviously jeopardized a fragile ceasefire in the region and clouded hopes that the conflict will be coming to an end soon. European countries are, of course, net energy importers, so any spikes in oil prices are bad news for the economies here. Now, losses have been brought today with airlines declining as much as 2%. Over the weekend, the International Air Transport Association, IATA, nearly halved its annual profit forecast for the industry due to the fuel shock. But this week, apart from the developments in the Middle East, investors will be keeping their eyes on the rate decision by the European Central Bank on Thursday, Agneta. And the expectation there is that the ECB will be raising interest rates by 0.25%.
Okay, now, Chiponda, let's move a little bit, zoom in a little bit on Germany, which could face an EU fine for failing to comply with the bloc's pay transparency rules, part of efforts to close the gender pay gap. Now, Chiponda, what exactly does this pay transparency law require?
Well, the EU pay transparency rules allow employees to request information on average pay for comparable jobs from their employers broken down by gender. So employers with 100 employees or more are also required to report regularly on the gender pay gap. And it doesn't end there. Employers also have to inform job applicants of starting salaries, and they will no longer be allowed to ask applicants about their previous salaries. Now, in Germany, that meant that actually a deadline was missed on Sunday, which is yesterday, to implement those rules. And that means that Germany now is in violation of EU pay transparency laws. So it is up to the European Commission to decide if it will be fining Germany as a result of missing that deadline, because, of course, EU countries had until Sunday to amend their national laws. But the German government recently said that the German law won't be changed until early 2027. The German family minister, Karin Prien, said it would like to see, that Berlin would actually like to see low bureaucracy implementation. So the German government is actually now in talks with other EU countries about potentially securing some changes to those new EU rules on pay transparency.
Okay, so now, Chiponda, finally, let's ask you this question. So what would the law actually change for employees, particularly women in Germany?
Well, it will allow women to find out if they're being paid less by their employer for the same work as a man where they work. And now data shows that on average, German women have historically earned less than men. In fact, the latest official European statistics, which are from 2024, show that the average hourly wage for women in Germany was 15.6% lower than that of a man here. And that figure was actually more than 3% lower than the pay gap in Europe, so than the average EU pay gap. So the gender pay gap here in Germany is actually bigger than in other EU countries. Now, of course, the gap isn't just about people being paid differently, so men and women being paid differently for the same work in companies. There is also in Germany, for instance, of course, a certain level of transparency in some areas like the public sector. So we do know that in the public sector, workers can look at how much their peers are paid. But that isn't the case, of course, in the private sector. And that is perhaps where more change is hoped for. And Germany has, of course, more medium-sized and small-sized employers. So that could be where the hope is that where the change is being hoped for here in Germany, at least. But it will be until 2028 for any new rules to take effect, because Germany has delayed changing its national laws.
Chiponda, I'm sure that lots of people will be looking up to that transparency pay law within Germany and how it shapes the entire industry, particularly for employers. Thank you so much for your time on the show.
Thanks, Onyeche.
That was Chiponda Chimbelu, our correspondent with DW in Germany. So now, let's talk about crypto. We're not giving you the numbers for today. Maybe tomorrow we'll do that. But the headlines have it here that the crypto industry is urging senators to tee up a vote on regulatory bill. So more than 200 cryptocurrency companies are lobbying groups urging the U.S. Senate to move quickly on digital asset regulation. So in a letter first reported by Bloomberg, government major industry players, including Coinbase, Ripple Labs, and venture capital firms, Anderson Horowitz, are calling on lawmakers to bring the clarity, on the forced legislation. So that's it. So we'll end Business Incorporated with the crypto stories. I'll see you again tomorrow.